maybe you're a swing trader, maybe you're an investor, but where you trade from, like myself, remotely, your most important and probably your biggest investment is your home. And you've been on a great ride since COVID. And this type of appreciation was even larger than what we saw going into 2008. And Melody Wright is with us, and I have to tip my hat to her that we've been talking almost a couple of years, correct, Melody? Welcome
Yes,
back.
thank
And
you.
yeah, and you were just a voice in the wilderness, the boy crying wolf, because a lot of people after '08 and then the recovery expected it to happen again. Then we had COVID and had a blowout in the market, and we're entering midterms, right? Midterms are here. So politically, what probably Biden and their predecessors should have thought about, and now it's like, uh, kind of late to be discouraging institutions
Yes.
from investing in single family housing is I know that they don't hold a ton, of the percentage of their funds in real estate, but is this going to bring more supply out onto the market because they probably weren't buying here anyway, um, right?
Yeah. No, I think the supply is already there, Dale. I was in the room with one of the largest in September, and what he told me is that as soon as the leases are up, they're rehabbing the properties and trying to sell. And this has been going on. I was in San Antonio last year and could see the fire sale on a lot of these properties. San Antonio people don't really care about it that much, and so they weren't really watching what was happening there. But because of the institutionals don't get a homestead exemption. And so property taxes were just crushing them in Texas. And
Yeah,
so, these folks were slashing prices already. So I think it has already kind of brought some inventory to the market. And I think we'll just continue to see that as these folks try to exit. But honestly, what you might see is a pause, Dale, while we've got two bills in committee right now. Road to affordable housing. The other one, I can't, the names are so stupid. I can't remember them on purpose.
okay,
But I think likely what you'll see is a similar program that they're already discussing where, the institutionals will be able to sell to a nonprofit or something like that at some sort of price floor, right? Where they're kind of, because right now, what this guy told me is like they're chasing the market. They can't find price because, what the realtors are telling them is just it's not moving the property. And of course, they don't want to take more losses. So you might see that they kind of pause for a minute until these programs are in play and there's some sort of workout in the background for them. Because in no way, Dale, do I think this is really about Main Street at this point. If it was about Main Street, this would have been done in 2015. It would have been
right.
done a long time ago. And so
Great
now,
point.
I think that in reality, it might actually unfortunately arrest price declines for just a little bit, not very long, until you've got everybody else racing to the market, which I think you're going to see those mom and pops are exhausted. Property taxes, insurance, replacement costs for repairs, trying to find people that qualify, evictions, all of this, landlording was a pastime, but I think that, people are kind of done with it. And I've heard that from some financial advisors where boomers are moving out of real estate into gold and other positions because it's why the headache, Dale? I mean, it's
Yeah.
such a headache. So
Yeah, and I was also thinking, because it's the first time I've heard that there might be a pause. Last time I heard you, you thought that this spring, the selling season, would not be good, and if prices are coming down into the fall, that were going to happen anyway, but they pass some legislation, um, it's possible, well, not possible. Donald Trump will take credit for making housing affordable when
oh
the
yeah.
right? So it could be a great look how much house prices have come down.
And
They
they've
know
already done
better.
that. Yeah, Scott Turner has already said things like that. Like, he's shown the new home price chart, which is crazy. I mean, you can see because we haven't had
Like
new home.
silver. It looks
Uh,
like silver, parabolic.
no, it's gone down.
Oh,
And so
okay.
Scott Turner is out there saying, he's the head of HUD saying, look,
Okay.
prices have come down under Trump. And so I
Yeah.
think that they're trying to play both sides right now because, obviously the boomers are big contributors. They don't want to see
Right.
their asset prices decline. Yet, the youth are going to drive really the what the future. And so you
Yeah.
can't leave them out in the cold. And so I think that they're going to try to toe the line. The spring is going to be very disorderly. If rates continue to come down like this, which so many people disagree with me, Dale, and think the opposite, but I want lower rates because every time we've seen them, we've actually seen price discovery. And
Okay.
so if we want price discovery, we need a little bit lower rates because we're right at 6.06 right now. That's what we ended Friday. The lowest we got last year was 6.08, and we had not been able to get there. And so we are there now. And those low rates kind of really had made us have a very strong December, not December 25, but December of last year. And so, and I had anticipated that strength would continue, but we got into April with the tariff tantrums and
Hmm.
people just froze. They froze. They didn't know what to do. So there's a lot going on. It's a complicated picture, but I honestly believe even if the institutionals kind of say, okay, maybe I'm going to be okay here, there's going to be some exit for me. I don't have to fire sale. Mom and pops are going to be out there in force in the spring because the narrative has been changing. Wall Street Journal, Bloomberg, they've all been running articles targeted at the boomers saying your house may not be what you think it's worth. And so I think that we're probably about to see inventory really grow here, as we enter that spring selling season.
Does Zillow still overstate prices? And that may be part of their
Oh,
delusion.
100%. 100%. And
Okay.
even they came out and said that values, those estimates had been reduced by 9.7% last year. 50% of homes had taken a price reduction. And so even the Zestimates, that's what they call them. and
Yes.
I've I've changed wealth effect to zest effect because but even the Zestimates are coming down and you can see it I track 85 markets. I can see it in every market. Westchester, everybody said Westchester was only going up. They had year over year price declines in November. And so a lot of this is narrative. And so as the narrative is changing, you're going to see a lot more activity. And I think that it's going to get pretty crazy in the spring.
Okay. I also read in your stream, can you explain to our viewers how the grift and fraud that's being exposed has impact on property prices, single family housing?
Absolutely. So, what we're seeing sort of uncovered in Minneapolis is happening all over the country. They sent and the American Rescue Plan, they sent out $320 billion to the states, local municipalities. And what they did with that money, a lot of them, because certain things were only allowed, is they would do down payment assistance programs, affordable housing programs, things like this, where theoretically, like a program like you would do in Rochester called Buy the Block, where an investor comes in, buys up all these vacant homes, rehabs them. What they're doing actually is putting lipstick on a pig and not really rehabbing them. But what happened?
Bought one of those once.
Did you really?
What a great looking pig. Anyway,
I love it.
it wasn't kosher. I lived there a couple years and then
Right.
sold it. Yeah.
Yeah. So, but what happens is it's like, and maybe everybody had, this is unintended consequences, and they wanted to do good things, but then they're like, hey, cousin, you can create this nonprofit and you can get, cheap loans or you can get assistance to buy up all these cheap homes. And so everybody got into the grift, and it's, this is how you get a $20 bottle of water in Iraq. I mean, it's
Yeah.
just everybody becomes the middleman to the government, and they're all they're all lined up with their hands out. And so, what you're seeing in Minneapolis is happening all over the country. And so I think people need to be aware that this has been holding up home prices. Like take Chicago, for instance, or Portland, where in Portland, if you were an illegal immigrant, you could get $30,000 for a down payment assistance. In
Wow.
Chicago, you get $15,000 for rental assistance. I mean, so this isn't chump change, and it's
Oh,
really made a difference in these markets.
yeah. Is that going away under Trump? I actually, my best friend in Chicago, his son bought up a lot of properties in the 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 worse areas, single family homes, and it was because of what he was getting from Biden, what Biden
Mhm.
was doing, and made a business out of it. Is that business under pressure because of that?
Yeah, the money's drying up. I think
Okay,
there will probably be some more grift that comes out of these two bills, but I think market forces are going to take over, Dale, because we've subsidized housing to death. People that anybody that could qualify has already qualified. The Fed has just reported purchase rejection rates over 20%, which is the highest in their series. Mortgage refinance rejection rates over 42%, highest in their series. And so, even with these programs, people can't qualify. And so, there might be some more money coming, Dale, but I don't think it's going to be enough. And I
yeah,
think that as some of this fraud really gets uncovered, we're going to realize that the economy, because the only sector that was seeing job growth was education and health services, which is where a lot of these fraudulent jobs are rolling up. And so,
okay,
if that's the case, then our labor market looks much worse than everybody is even imagining right now.
right. And I think you're the first to say that even the upper end of the K is now under pressure. So um, tell us what pressures they're under, because people that aren't in the upper end of the K think they just have it made. So what's going to weaken them to have to consider maybe even selling their homes?
Well, it's really what's impacting everybody else there's a,
Okay,
a lot of factors, but it's like, okay, I have five properties. My property tax has gone through the roof. My property insurance has gone through the roof. My electricity bills have gone through the roof. Like,
yeah,
do I need five or should I go for four? And these are the kind of, plus they're the ones getting killed, Dale, from these investments in multifamily investments in REITs. These
yeah.
LPs, they reach out to me. They've told me, I invested in 10 different multifamilies. I'm getting $0 right now. They've asked for capital calls. And so, they've made some risky investments that are hurting them right now as well. Over the holidays, there was an article in the Wall Street Journal talking about pick your luxury home from the year that they had featured over the
Oh,
year.
yes, yes,
Okay, funny story. Every single one of those is an indication of what's going on at the top of the K. There was someone who died, but there was a lot of downsizing, Dale.
yeah. All right, yeah,
And it's
okay,
like, oh, I just they're not going to say this property's too expensive to maintain, but it's like, oh, I'm
yeah,
done decorating this and
uh,
now I want to downsize was a that's just BS.
yeah.
You don't, there's rich people don't stay rich by making stupid decisions. And why, hang a albatross around your neck at the same time they're losing in some cases their cheap labor to maintain those properties. And so it's just all getting way too expensive and they're going to make decisions or they're going, I'm sorry to say this, but they're going to pass on and their kids are not going to be able to afford it. Charles Schwab did a study and said in 70% of cases, kids sell the homes they inherit.
Okay, that's yeah, that's definitely a catch 22 for people. And you were talking about the consumer, and I want to postulate something to you
Sure.
because I think there's a potential for a pretty good bull move in the oil, which is going to drive up energy costs for everyone. I know personally I'm paying twice as much to heat my home with nat gas this year. But oil and gasoline have been the bright spots for the consumer. And
Mm-hmm.
if gas prices go up a couple bucks a gallon because there's a supply disruption out of the Middle East, could that you would think that wouldn't really bother the upper K, where, they just they'll go out and spend, 2 grand on dinner.
Yeah.
So, yeah, go
But
ahead.
the upper K are investing in things that the lower K are buying, right? And if the lower K can't, I mean, I remember seeing fist fights at gas stations, Dell, when inflation was at its, and I'm not, I mean, I
Yeah,
saw people having full on panic attacks when I was living in Pennsylvania. And so, then you look at Saks, you look at things
the
like this.
stores. Yeah.
Yeah, the stores, retail,
They're
every
going to Goodwill now, some of these wealthy people.
exactly, exactly. And there's a point where even they'll stop being able to go to Walmart. They're lining up at these food banks, and so that's going to impact the top of the K. And God forbid we have any correction
In
with this
equities.
AI. Yeah, I
Yeah.
mean
Okay.
you're talking. But I think they already pulled back, Dale, after
Yeah.
April. Like as much as the market has ripped and roared, I think a
Yeah.
lot of people kind of pull back, these more sophisticated investors because they feel very uncertain about the market right now, even though it's roaring along.
Yeah. There's a head and shoulders top in NVIDIA, which fundamentally you've been skeptical of for quite some time.
Yes.
So, I could see at least 150 and possibly 130 coming in the video. So even there's not even unity in the Mag 7. You
Right.
can't group them. They're bifurcated even within the Mag 7. So 10-15% correction would scare those people you're talking about.
Oh, I think so. I
And
think
then
so.
and then they'd feel great if the S&Ps went to 8,000. They'd be happy again.
Maybe, or maybe they've
Okay.
lost enough. Like that's the thing people forget is like when you're out, you're out,
Yeah.
and so uh, San Francisco, for instance, was just on fire for a couple of months. And what I was hearing from followers was, oh, we're trying, those of us that were laid off are trying to offload to newly minted millionaires. But it stopped very suddenly in November. And, I think that is a market that's telling you that even this kind of crazy mania is it has a there's a point where it just doesn't matter anymore. It has less impact, and I think that we're actually getting there with the stock market because I don't think anybody believes this, Dale. I mean, it's a very, in my opinion, I mean, yes, you've got the bulls out there screaming, 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 but I think the regular public is just kind of like, I don't know what's going on.
I don't know what's going on.
Yeah.
If I didn't have candlesticks to guide me
Right.
and a picture, a chart, I don't know what fundamentals to believe anymore. I don't think anyone else
Exactly.
does.
No.
It's kind of dangerous actually to not have a narrative or a Walter Cronkite or a David Brinkley,
Hmm.
people who you could trust when you listen to them. All
Right.
news is like editorialized now.
Oh yeah, you can't.
It,
And
it's it's not
yeah.
journalism.
Right. And that's why I went out on the road, right? And I had to see it for myself. And that is where, it's funny even now I'll question things that I've seen because the narrative is so strong, but you have to go and look for yourself because we're not getting the real deal. And there's a lot of kayfabe going on right now. And a lot of pointing fingers, a lot of, Powell pointing at Trump and Trump
Yeah.
pointing at Powell. But in reality, what it looks like to me, based on everything that's happening, is they're going to perform a lot of things to make it look like they're trying, but it looks like they're going to let this market run because putting those guardrails on the FHA program that went on in October, we're seeing delinquency rise significantly, and we're going to continue to see that through and probably with a material, you know, increase by Q2 of 2026, which that's going to be another force that's going to be dragging down prices as well. So,
Okay. Well, I want to address something I've been reading about the debt wall coming for commercial this year. Do we get through it through lend and extend with these underwater properties in the commercial market and single family?
so
I
I don't,
mean, multifamily, I meant to say.
yeah, multifamily. I've been tracking a lot of these, been looking at some of these securitizations, Dell, and I think this is a lot weaker than what we're seeing right now. And they've already done a lot of the extending and pretending. What they're doing right now is that if you're current on your interest, but your note has matured, they're still letting you just pay interest. And so there's going to come a point
I
like,
see.
I recently wrote about a deal that Blackstone lost. It was like an 87% haircut. At some point, that bill comes due. And I think this is honestly what this announcement is about from Trump. Schwartzman from Blackstone was a big donor. And I
Yeah,
think that they're losing their shirts on commercial, they're losing it on
yeah.
single family. And so they're going to, do what they can to try to continue to extend and pretend. But I don't think so. I think that, they're going to do whatever they can to make it through the midterms without, a complete fiasco. But I don't know. I think the horse is kind of out of the barn. And I think we're going to see the actual impacts from this crisis in real estate throughout the year, and we'll probably lose a big player. Is what I'm actually anticipating.
Okay, bank failures, like the SNL crisis of old, that a lot of these credit unions, they're in trouble too. I know that a year or so ago, you and I talked about an aspect of it that was creating supply shortages, and it was Airbnb.
Right.
And it was back here and it looked like a top, and we had a pretty big decline, and we're in a recovery mode. I mean, if a stock isn't going up in this environment, it's really got problems, but nowhere near the highs, right?
Right.
What's happening to these guys, the Airbnb guys?
This is just another, it's kind of crazy to me. They're hurting with travel down. I mean, you take Vegas, for instance, good grief, they're getting killed on travel. Sevierville, Tennessee, right here where there's like Dollywood and Gatlinburg and all these things, they're getting killed. And so you're seeing a lot of motivated selling. What's been happening, Dale, is private credit has stepped in to kind of be a backstop here. They've
Yeah,
done a lot of lending that none of us can see.
yeah,
They lend to a lot of these Airbnb bros.
yeah,
They're shadow lenders everywhere. But as they come under stress, then that's, liquidity that the Airbnb bros can't access. Think Tricolor, right? This is
yeah,
a very good example. And so, more and more, they're going to have to list, they're going to have to sell because they're not cash flowing. And there's only a certain amount of time that you can keep extending and pretending. And what we're seeing on the privates, what we call non-QM loans or non-qualified
yeah,
mortgage, I mean, the delinquency there is over 12%. It's a small percentage of the market, but it's massive. And so these securitizations are going to start to explode because a lot of them are in securitizations. And what's funny is you're seeing big players like Rocket, United Wholesale trying to get in on this right now. And they're,
okay.
it's always
They
we're
have
in the last
FOMO
stages.
for yeah,
Yeah.
they have FOMO for getting in financial trouble.
It's crazy, Dale. It's just it's wild when when you study history and the history of these types of manias. It's wild to watch it live. It
Yeah,
really
well,
is.
yeah, I think that the poster child I read in your stream is about these 350,000 homes in Florida, in the boonies, in the middle of nowhere, as you put it. These are probably mostly seniors
Hmm.
that are stuck now, aren't they?
Yeah. Oh, it's so sad. Yeah,
Yeah,
they're stuck. They're
yeah. I mean,
absolutely.
the
Yeah.
decisions you make, after you're 50 or 60, you don't have as much time to recover
No.
from a bad decision. So they'll probably be living out their days if they could keep that house there, right?
It absolutely, absolutely, and it's really it's really quite sad. Like when I was living down in Miami and doing my touring all around, there was a called Pembroke Pines, was kind of a blue class retiree neighborhood, and they had just gotten their HOA increase notice, and they like stormed the apartment building because they're on a fixed income. Like they may have thought things would go up a little, but not like
Yeah.
this. And so there's nothing they can do. And so you've seen inventory increase there significantly. But these people in the middle of Florida, I mean, this has happened so many times before in previous cycles. But yeah, they're stuck. And I mean, the Wall Street Journal this morning, I think, came out with an article about, retirees can't move to Florida anymore, which is something I started writing about in 2022 after Ian, when we first saw those property insurance increases.
Why can't they if home prices have come down? Why
Well,
can't they?
insurance, taxes.
Okay.
Yeah. I mean,
So,
it's
so you're
really
really going to need a huge price drop to make up for basically your overhead
correct.
for having a
Correct.
home.
Yeah,
Okay.
absolutely.
All right. I'll tell you what, Melody, this was another great conversation. And what would you advise people to do if you're a seller, go to the bid, and if you're a buyer, just be patient for another year or two?
Yeah, if you're a seller and you know you're going to sell in the next year, you need to get that property listed and you need to really get a proper appraisal, which is costly and people don't want to do it, but you need an independent appraisal. If you don't have the time yourself to really dive into the comps of what's going on in your neighborhood, a program that you can do that with is called Property Radar. It's a subscription. They don't sponsor me, but it's not completely accurate, but it gives you a good picture of what's going on behind the scenes. But you need to listen. Yes, I agree. You need to, price lower than what you're seeing out there if you really need to move, because that's what I'm seeing all over the country is people that are priced right are moving right away. Boom, it's gone. But anybody that's really with that inflated price is just sitting and sitting and sitting. If I'm a buyer, hold on, this is not the time. I understand sometimes you do have to make a move, but if you do, be very careful about the leverage that you're taking out and be aware of the risk.
Always. The only thing
Yes.
we could control in any investment is the risk. I'm not sure how you control risk on an illiquid investment like real estate.
Right.
How, so you've been a property owner. How do you go in and look at something and calculate what your risk is? And I'm only going to risk that maybe 20% of the value, appraised value. Do you just make a decision of how much you're willing to risk? And then if the property depreciates, it's time to get out of it, like
Well,
in the market?
I think it depends on how you're looking at real estate, right? If it's shelter and you want to be
Yeah.
there for the rest of your life, then, whatever. Have reserves if you've taken out leverage. I always, urge everyone to have a year of reserves because you don't know what's going to happen. But yeah, it just really depends on what you want to do with that property. If you think you're going to move, I mean, I wouldn't be buying if I wasn't planning to stay somewhere for some time, because I think that we are definitely with the silver tsunami. We are entering very choppy waters in real estate. And, over the next several years, we will be dropping down to that bottom. And so it's just very risky. And I think you have to take your own personal goals and what's going on with you and then make an assessment from there. But if you're taking out leverage, please put as much down as you can, have a year of reserves, and no matter what anybody tells you, pay that mortgage off as fast as you possibly can.
Yeah. So, I mean, this cycle is only in the early stages.
Oh, yeah.
And
Yes.
so, and normally, and this is not normal, for a bear market in real estate, let's call it that. We're talking 5 to 10 years on this cycle.
I think so. And we may be done for a while, Dale,
Yeah,
because of our demographics. I mean, it
yeah.
may be that housing becomes
It's
about
over.
shelter. Yeah.
Yeah, it's not an investment anymore.
It's not an
We're,
investment. It's,
yeah,
yeah.
yeah. So, you know what? We don't own anything really anyway. So do
That's
you ever think
right.
about you
That's
think
right.
you and I'm talking about in even the stocks or even the cash in the bank isn't ours. It's being
Hmm.
held and or controlled, and
Hmm.
as a depositor, you don't get paid back first. The
Hmm.
bondholders do.
Right.
So what do we really own
That's
except
right.
what's in our hearts and what's in our soul? that
Yep,
no one can
exactly.
take away from us.
That's exactly right, Dale.
It's
That's
great
how
to
I
talk.
operate.
Yeah, you wear it on your sleeve, and that's your compass, and everything else you can't take with you. In fact, why don't I end it with this joke, Melody? So,
Okay.
all right, so this guy knew he was going to pass away, and he didn't care for his children. And the angel visited him, and he asked the angel if he could bring one suitcase with him. And the angel said, "No, you can't bring anything up there with you. You come as you are." He said, "Can you talk to St. Peter about it?" So the angel comes back and said, "St. Peter has agreed to let you take one suitcase." So he liquidates his real estate and stocks and bonds and buys a bunch of gold bars and puts it in the suitcase. And when his time came, he was at the gate, and Peter said, "Oh, yeah, I did allow you to bring one suitcase. I remember the case now. Uh, I'm curious, what's in it?" So the man opens it, and St. Peter says, "Why did you bring pavement?"
That's right. That's
Yeah,
exactly right.
yeah. So, Melody, I hope it's a great year for you. I hope that people at least sign up on your Substack because let's face it, most of everyone's net worth is tied up in that thing called a house. Even though
Hmm.
we turned them into homes, they're just
Right.
houses. So you could
Right.
go anywhere and have a home. The home is where
Right.
the heart is.
Amen.
The other's just building materials.
That's absolutely right, Dale.
Uh,
Amen to
yeah, thank you for letting me, get on the pulpit for a little while, Melody.
that.
It's
Anytime.
it's great to talk to you. Thanks for joining us today. And I'm a big fan, and I will stay in touch and see how these things progress. 2026 started off with a bang in Venezuela. I think it's going to be wild.
Me too.
We
Thank you for
need,
having me. Oh yeah.
yeah, we
It's gonna
need
be
to
a while.
start. We need to put on our seatbelts, Melody,
I agree.
and be
I agree.
safe.
Thank you.
Great seeing you. You
Thanks,
look
Dale.
great. All righty.
Thanks. See you
Melody
later.
Wright, everyone. The thing that you're in right now, watching us, you need to know about it. And that's going to be a wrap. You know, bull markets don't last forever, bear markets don't last forever, but be careful with all your net worth tied up. It'd be like tied up in one big trade, you know. So think about what you heard today. And I'll see everyone.